So let's talk about the inflation rates and the effect that it's had on the Toronto real estate market. I actually think it's had a different effect than what probably the Bank of Canada was hoping for and the powers that be, because what it actually caused, or what happened in the city of Toronto, was we actually developed bigger micro markets. And micro markets are um, markets based on specific neighborhoods or specific house types. So for homes, we still have a massive lack of inventory. And so what happened when the interest rates went up, sellers were less inclined to sell, but we still have massive demand because of our housing supply and the shortage issues that we have. And so all that did was drive up prices even more because we still have demand and lack of inventory. So because of mortgage rates and how it's tied to inflation, that demand just increased the inflation, which is the opposite effect of what the government wanted. As it relates to condos, again, the unique properties were moving, some of them not as much, but we saw over the past 2 months a huge return to multiple offers, and our rental sector has been going bananas. The other thing to keep in mind about all of this is that real estate is a cash cow for the city of Toronto, not only from the land transfer tax, because if you've purchased in Toronto, there are 2 land transfer taxes, which is a huge source of income for the city, but also because of all of the people that touch a real estate transaction. So think about all of the people that are employed, the income tax that's generated for the government from all of that. And when you slow that down, you're ultimately hindering the city's performance and what they can do. And so if we reference the recent election with the new mayor, Olivia Chow, and we all acknowledge that we have a serious housing shortage and we need to do something about that. But in her platform, what she talked about was how she planned to raise money. And a lot of it's going to come from real estate. But the 2 areas that she mentioned was, one, increasing the land transfer tax on homes over $3 million, and one was increasing the tax rate on homes over $20 million. And she plans to use the revenue from those 2 sources in order to fund the construction of 25,000 new low-income or affordable housing units. The problem with that is that there's only been 2 homes that have transacted for over $20 million in the city in the past 2 years. So that's not going to be a huge revenue source from her. And homes purchasing over $3 million, increasing the property tax, sure, that's going to generate some money, but not enough to build the 25,000 units that are probably just barely needed. So there needs to be another source, and I don't think that crippling the real estate market from that perspective, of having prices go up, which makes things again more unaffordable for people. It's all a cycle, and I'm not really sure that there's been a lot of thought that's gone into all of this. But needless to say, we definitely need more housing, and we definitely need a better plan in order to get there. So those are just my thoughts on how all of this, the interest rates rising and inflation has played out in the Toronto market. It's definitely been a much more, also like a seesaw kind of model, because January was slow, February starting getting busier. People that wanted to buy at the bottom missed that opportunity because they waited, and then prices went up and we had loads of multiple offers again, and now it's going to probably slow down for the summer. So we'll see where we land into the fall, but it's been a hell of a 2023 so far.